What if I told you that one move by China could completely change the future of silver prices? What if the biggest silver rally in years is already starting behind the scenes while most investors are still asleep? Welcome back to Pulse of Silver, the channel where we uncover the biggest stories shaping the silver market before the mainstream media catches on. Today's story is massive because according to precious metals expert Andy Schectman, China may have just triggered the conditions for a major silver breakout. And if he is right, silver investors could soon witness one of the most explosive moves the market has seen in decades. Over the past few years, the world has watched central banks buy record amounts of gold. But now, attention is quietly shifting towards silver. China's industrial machine continues to consume enormous amounts of silver for solar panels, electronics, electric vehicles, military technology, and advanced manufacturing. At the same time, reports continue to surface showing growing stress in physical silver supply chains. According to Andy Schectman, China is not thinking short-term. They are positioning for a future where control over physical commodities becomes more important than paper currencies. That is why many analysts believe China has been aggressively securing long-term access to precious metals. Some reports suggest Chinese buyers are increasing direct purchases from miners while also reducing dependence on Western exchanges. This matters because silver is already facing a serious supply problem. Unlike gold, much of the silver used in industry is consumed permanently. Once silver goes into solar technology or electronics, a large percentage is never recovered economically. Meanwhile, industrial demand continues rising every single year. Solar energy alone has become one of the largest drivers of silver consumption worldwide. Now think about what happens if China begins accumulating even more silver while supply remains tight. The available physical silver on global exchanges could shrink rapidly. And when physical supply tightens, the paper market can start losing control over price discovery. That is exactly what Andy Schectman has been warning about in multiple recent interviews. Another major factor is trust in the financial system itself. Around the world, many nations are slowly reducing reliance on the US dollar. Countries are exploring trade agreements outside the dollar system, building gold reserves, and looking for assets with real physical value. Silver benefits from this environment because it is both a monetary metal and an industrial metal at the same time. This creates a very unusual situation. Even if investment demand slows temporarily, industrial demand can continue pushing the market tighter. But if both investment demand and industrial demand rise together, the pressure on silver prices could become enormous. That is why some analysts now believe silver may outperform gold during the next phase of the metals bull market. What makes this moment even more interesting is that most ordinary investors still are not paying attention. Silver remains one of the most undervalued hard assets in the world compared to inflation, money printing, and growing industrial demand. Yet behind the scenes, major players appear to be preparing for something much bigger. And according to Andy Schectman, China's latest actions may be one of the clearest signs yet that the global silver market is entering a new era. To understand why this story matters so much, we first need to understand how small the silver market really is. Most people assume silver trades like a massive global asset with unlimited supply. But the truth is very different. Compared to stocks, bonds, or even gold, the physical silver market is surprisingly tiny. That means it does not take huge buying pressure to move prices dramatically. China understands this better than almost anyone. For years, China has been building dominance in manufacturing, renewable energy, and advanced technology. Every one of those sectors needs silver. Solar panels require silver paste for conductivity. Electric vehicles need silver in batteries and electronics. Military systems, medical devices, artificial intelligence hardware, and communication systems all depend on silver's unique properties. And here is the problem. New silver discoveries are not growing fast enough to match future demand. Mining companies are struggling with rising costs, lower ore grades, energy expenses, environmental regulations, and geopolitical uncertainty. Mexico, one of the world's largest silver producers, has also faced growing concerns over mining policy and supply stability. Now imagine China looking at this situation from a strategic perspective. If silver becomes critical for future technology and energy infrastructure, securing supply becomes a national priority. This is exactly why many analysts believe China's recent actions are not temporary trades. They may represent long-term positioning for a future commodity war. Andy Schectman has repeatedly warned that Western investors still focus too heavily on paper contracts while Eastern nations continue accumulating physical assets. He believes this divide between paper silver and physical silver is becoming more dangerous every year. The COMEX market has also become a major focus of concern. In recent months, there have been unusually large physical delivery requests compared to normal historical patterns. Some experts believe this signals declining trust in paper-silver contracts. Instead of rolling contracts forward, more participants appear to want actual metal. That is important because the paper-silver market operates with enormous leverage. There are often far more paper claims than physical ounces available for delivery. Under normal conditions, this system works because most traders settle contracts in cash rather than demanding metal. But if too many participants suddenly request physical delivery at the same time, the pressure on the system could become extreme. This is where China's role becomes critical. If Chinese institutions, manufacturers, or state-connected buyers continue removing physical silver from the market, available inventories could tighten very quickly. And once physical shortages become visible, investor psychology can change overnight. We have seen similar situations before in commodities. Markets can stay quiet for years and then suddenly explode higher when supply stress becomes impossible to ignore. Silver is especially known for violent price moves because of its relatively small market size. That is why Andy Schectman and many precious metals analysts believe silver may not rise slowly. Instead, they believe it could experience sharp upward revaluations once the market realizes how tight physical supply has become. Right now, most people are still focused on interest rates, stock markets, and cryptocurrencies. But beneath the surface, a much larger shift may already be happening. Physical assets are becoming more important in a world filled with debt, currency instability, and geopolitical tension. And silver may soon become one of the most important assets in that new environment. One of the biggest reasons analysts are becoming extremely bullish on silver is the growing conflict between paper markets and physical ownership. This issue has existed for years, but according to Andy Schectman, the pressure inside the system is now reaching dangerous levels. Most people think when they buy silver through an ETF or futures contract, they own real silver. But in many cases, they only own paper exposure to silver prices. The actual amount of physical metal backing these systems is far smaller than many investors realize. This structure works only as long as confidence remains high. But confidence can disappear quickly during times of financial stress. When investors become nervous about inflation, banking problems, geopolitical conflict, or currency weakness, they often begin demanding physical ownership instead of paper promises. That shift can create huge stress on exchanges and bullion markets because suddenly, everyone wants delivery at the same time. Andy Schectman believes we are already seeing early signs of this transition. Physical metal continues flowing from west to east, especially toward countries like China and India. At the same time, inventories available for delivery on major exchanges appear increasingly tight. This is important because silver is not just another commodity. It has a long history as real money. For thousands of years, civilizations used silver for trade, savings, and wealth protection. Even today, many investors still view physical silver as insurance against financial instability. Now combine that monetary role with exploding industrial demand, and you get a market unlike almost anything else in the world. Industrial users need silver regardless of price because there are few substitutes for many applications. Solar companies cannot simply stop using silver overnight. Electronics manufacturers cannot replace it easily either. This creates a situation where industrial demand can continue even as prices rise. At the same time, investment demand tends to increase during economic uncertainty. That combination can create supply squeezes very quickly. Another major concern is inflation and debt. Governments around the world continue spending enormous amounts of money while debt levels reach historic highs. Central banks remain trapped between fighting inflation and supporting weak economies. Many investors fear future currency devaluation as governments attempt to manage these financial pressures. Silver often performs strongly during periods of declining confidence in paper currencies. That is why some analysts now compare the current environment to previous major precious metals bull markets. But this time, there is an additional factor: global industrial transformation. The green energy transition requires huge amounts of silver, and China is leading much of that expansion. This means silver now has two powerful demand engines working together. One comes from investors seeking protection. The other comes from industries needing physical metal for production. According to Schectman, this could eventually lead to a complete repricing of silver. He argues that the current silver price may not accurately reflect real physical scarcity because paper trading still dominates price discovery. But if physical demand overwhelms paper supply, that pricing system could start breaking down. And if that happens, silver prices may move far faster than most people expect. Throughout history, the biggest market moves usually happen when the majority least expect them. Silver has spent years frustrating investors with volatility, pullbacks, and slow price action. Many people gave up on the metal completely. But according to Andy Schectman, that frustration may actually be part of the setup for a much larger move ahead. Today, global markets are filled with uncertainty. Governments continue printing money. Debt keeps rising. Wars and geopolitical tensions remain unstable. Banking systems face growing pressure, and confidence in traditional financial institutions appears weaker than it was just a decade ago. During times like these, investors often return to hard assets. Gold has already attracted massive central bank buying in recent years. But silver remains far behind gold in terms of public attention. That is exactly why many analysts believe silver still has enormous upside potential. One reason silver could move so aggressively is because the market remains relatively small compared to global investment capital. If even a small percentage of institutional money shifts towards silver, prices could react violently. And now China's actions are adding another layer to the story. China is not only a major industrial consumer of silver, but also one of the world's most powerful economic forces. When China changes commodity strategy, global markets notice. If Chinese demand accelerates while Western inventories continue shrinking, silver could quickly enter a supply panic. This possibility becomes even more serious when you consider declining trust in fiat currencies. Around the world, countries are increasingly discussing alternatives to dollar dominance. Trade alliances are changing. Nations are settling transactions in local currencies. Central banks continue buying hard assets. Many experts believe the world is slowly moving toward a more commodity-backed financial structure. Silver could benefit enormously from that transition. Andy Schectman often describes precious metals as financial insurance rather than simple investments. In his view, physical silver protects purchasing power during periods of monetary instability. And right now, instability appears everywhere. Inflation continues damaging household budgets. Interest rates remain uncertain. Housing affordability is collapsing in many regions. Governments continue accumulating debt at historic levels. Investors everywhere are searching for assets that can survive a changing financial system. Silver sits directly in the center of this environment. It is both industrial and monetary. It is scarce but essential. It is heavily used yet historically undervalued. And according to many analysts, it may still be priced far below its real long-term value. This is why some experts believe silver's next move may not simply be another normal rally. Instead, they think it could become a major global repricing event once physical scarcity becomes impossible to ignore. Could silver really soar dramatically from current levels? Nobody knows for certain. Markets are unpredictable and volatility always exists. But what is clear is that the fundamental pressures inside the silver market continue building. China's latest moves may simply be the latest warning sign. And if Andy Schectman is right, the world may soon discover that silver was never cheap after all. The silver market is changing. What once looked like a quiet and ignored asset is now attracting attention from governments, institutions, industrial giants, and long-term investors around the world. China's growing influence in precious metals may be one of the biggest stories of this decade. Whether through industrial demand, strategic accumulation, or changing global trade systems, the country appears determined to secure access to critical commodities for the future. And silver sits near the center of that strategy. According to Andy Schectman and many other precious metals analysts, we may be entering a period where physical ownership matters more than paper promises. If that trend continues, silver prices could behave very differently from what investors experienced over the past several years. But it is important to stay realistic. Silver is highly volatile. Prices can rise quickly, but they can also fall sharply. Short-term moves are impossible to predict with certainty. News events, interest rates, economic reports, and geopolitical developments can all create sudden market swings. That is why smart investors focus on long-term strategy instead of emotional reactions. The biggest lesson from today's story is not just about price targets. It is about understanding the changing world around us. Financial systems are evolving, global power structures are shifting, commodity demand is rising, and physical assets are becoming increasingly important in uncertain times. Whether silver explodes tomorrow or takes longer to move, many analysts believe the long-term fundamentals remain stronger than ever. Industrial demand continues growing. Supply challenges continue building, and confidence in fiat currencies continues weakening across many parts of the world. That combination could create a very powerful environment for precious metals in the years ahead. If you enjoyed today's breakdown, make sure to subscribe to Pulse of Silver and turn on notifications so you never miss the next major silver story. We cover the biggest moves in the silver market, precious metals news, global economic shifts, and expert analysis designed to help you stay informed in a rapidly changing financial world. This video is for educational and entertainment purposes only. Nothing in this content should be considered financial advice. We are simply sharing market news, opinions, and analysis from public sources and industry experts like Andy Schectman. Always do your own research before making any investment decisions. Precious metals investing involves risk, and prices can move up or down at any time. Please consult a licensed financial advisor before investing your money.